All right, folks, it is starting time. It says 2 o'clock on my watch here, so make a prompt start. Thanks to those of you that are already signed in. Appreciate you guys being there. And like I said before, if you have any questions, meanwhile, there's a Q&A option. You can put a question there, or if you have something to say in the chat, comment, question, anything to add, feel free to. That'll be in the comments. This is also being recorded, so this will make that available to anybody that wants to have it as a reference, and I'll post it as well. But thank you all very much. Happy Valentine's Day to you. So if you're joining us here on the 14th, it is Valentine's Day. So very happy one to you. Today we're going to be talking about, this is like a home buyer's guide to using the VA home loan benefit to purchase a home in Puerto Rico. I'm going to try to touch on everything I think you need to know from the loan perspective. A bit about me. I'm a loan officer with a company called CoLab Lending. We have an office in Puerto Rico, and I live and work in Puerto Rico myself personally, as well as I originate loans in some other parts of the U.S. as well. But today we're going to focus on Puerto Rico. I'm a father and a husband, proudly. And today, this morning, I don't know if anybody has little kids, but today was big doings, getting ready for Valentine's Day at school. Been up early doing hair and all that stuff. But in a past life, I was a science teacher and then a dean of students at some international schools. I taught for a long time and was like involved in a lot of different aspects of education. And so when I started working as a loan officer a couple of years ago with CoLab, I thought that it would be a good opportunity, to kind of share some of the information that I was learning. Because as I was learning how loans work, I thought I was like, man, I think a lot of other people could benefit from this. So I started a YouTube channel a little over a year ago to kind of help make things transparent. So you can find that channel on YouTube with the moniker at Gringo Criollo Nate. That's a nickname that I got when I lived in Colombia. I was working on my Spanish, and I guess at one point it got good enough that they started calling me El Gringo Criollo. So that kind of stuck, and now just kind of leaning into it. But my whole goal, at least as like my professionally, is just to be like a values-driven problem solver. So try to provide transparency because mortgages, let's be honest, mortgages are complex enough. Puerto Rico, that's like a whole other layer of complexity. So my whole goal is to help make getting a loan, like using someone else's money to buy property in Puerto Rico, as transparent, streamlined, and smooth as it can be. That's my whole goal. And so, being honest, doing things that I say that I'm going to do. These are all part of my values that I try to bring to every transaction. And the broader picture, just like general life goal, is just providing service, like being of service to people, and that successful follow from that. So thankfully, so far so good. All right, enough about this guy. First question I always get from borrowers is, what are rates like? Where are the rates? What are rates? What rate will I get? That's always the first question. Really, it could not be a harder question to answer with having no information about somebody's scenario, because literally what rate someone ends up with at the closing table depends on at least 20 different factors, right? But in general, right now, and this recording, like we said, is the 14th of February 2024. VA rates we can find in Puerto Rico and elsewhere between 5.5% and 7.75%. Right? I know that's a huge range. Like I said, if you just call a loan officer and ask what are rates like right now, that's like calling a restaurant and asking them what's for dinner, right? It depends. It depends on your needs, your wants, what your priorities are, and all those things. But that's the best answer that I can give at the moment, right? Without knowing a single other thing about somebody's scenario. Um, the biggest determinant in terms of like what rate you're going to have access to is not your credit score, right? It's not credit. It has to do actually more with how your lender fees are structured for a VA loan specifically, right? This applies to any other kind of loan as well, but also to VA, because basically rates and closing costs are a give and take. Okay, if you want a lower rate, you might have heard people say they bought the rate down, and so they paid extra at closing to get a lower rate. That can be accommodated, and so you'll have a lower rate, but your closing costs will be up. And the opposite is true too, right? We can do If you want to keep your closing costs, some people, their priority is, I don't care what the rate is, just let me get into the property, make the numbers work with my income. But they don't want to bring a lot to closing. So we can accommodate that by rolling certain lender fees into the interest rate, which then means that their closing costs go down, but that their interest rate could go up. So that's the reason that you're going to see this uh, variation between the fives and the sevens. That's a big range, has to do with one of those main factors being how those fees get structured. Seeing a bunch of other folks joining in here. That's awesome. Thank you. Welcome. If you got questions or comments, we got a Q&A section in a chat section there. I'll be keeping an eye on those things if anybody has questions. Hopefully we address everything, but you never know. And so because I consistently get the question, what are rates? I just want to say, here at the top that a good loan officer should offer you much more than just a rate, right? They should be honest, transparent, have good communication. They should structure the loan to meet your needs. So like, maybe it's finding a balance between the rate and the closing costs if that's what's important. Um, but they should offer you a smooth process because there's a lot of steps to getting a mortgage, right? It's not, at least not yet, we're not able to just, order one on Amazon, right? With a few button clicks, because there's just too many things that need to go into it, too many different entities that need to be coordinated. So that's what we do. That's what I like to do. As far as problem solving goes, is like there's the pre-approval step, and getting that done in an efficient time frame without needing to track down every single document you've ever had. Contract negotiation is a piece that I can help with. The appraisal step, obviously, like does it appraise on value? Does it need repairs? Do we need to have more conversations about that? What about contingencies for those things? All those things come into play. Obviously, title work, insurance, dealing with the agents and the sellers and their expectations. If there's repairs needed, all these things. Oh, looks like it got duplicated, but you get the idea, right? So like if you're calling, if your main goal is just the rate, if that really is your premier, like your main priority, cool. Let's work on that. Um, or if it's closing costs, if that's the other big factor, well then let's dive into that. But that's the main idea that I would like you to leave with is that, or at least at this point, is that a good loan officer, a good loan, whether it's VA or otherwise, it's more than just the rate. Obviously, that is the cost of borrowing the money, so it's super important, and everybody knows that. But just to leave you with that idea here that it should be more than just you should get your conversation with your loan officer should be more than just about the rate. All right, let's dive into the basics about VA loans. Um, First and foremost, for using this loan program in Puerto Rico or anywhere, is it can only be for your primary home. Okay, and that has absolutely nothing to do with how many days you plan to spend in Puerto Rico. You can tell us that. You can say, I plan to be there more than half the year. That's great, but underwriters are not going to ask about that, right? They're going to want to know if the source of qualifying income will follow you here if you're moving to Puerto Rico, or is it already here in Puerto Rico and you're just buying a home where you already live? So it has everything to do with the source of income because what we're going to ask for and what the underwriters are going to ask for is um, okay, if they're moving to Puerto Rico and purchasing their primary home, is their source of income also going to continue the same? Are they having to quit that job and start a new one? That might get a little tricky. Or, here's some types of income that are easily acceptable, right? So if you're already employed in Puerto Rico, great, we can use that income, right? Obviously, so long as you're reporting it on your taxes, we can use it. The other types of income. So VA disability income. If somebody has like a service-connected disability, they're receiving VA disability award. That we could definitely use because that will follow you no matter where you go. As would retirement income, Social Security income, pension income, anything in that kind of category. Obviously, if you can move and live wherever, those checks, those deposits will continue to happen. And so that is definitely something that we can use. So if somebody wants to retire here and they've got those kinds of income, no problem. We can use that for VA loan. If you are currently employed and you want to move to Puerto Rico and your employer will put it in writing that you're allowed to work 100% remotely, okay? It needs to be on an official letter from your employer. We can use your income. A note there, some employers like the underwriters, they just want to see that your income is going to continue if you're in Puerto Rico. So if it's 100% remote work, that letter would do it. However, some human resources departments or payroll folks, they're not able, if they may not ask, okay, like where are you physically living? There are some companies that their payroll doesn't work if they know that you're residing in Puerto Rico. So that will be up to you. All we need to know as far as the loan process goes with the underwriting is that you have permission to work remotely so that if you're in Puerto Rico, your income is going to continue. It doesn't matter, right? That's what we need to see. And also too, if you're self-employed and it makes sense to underwriters, then we can use that income. Obviously, I know that's a little general. Lots some self-employed folks, it kind of depends like what the project is, right? Like if the company or the business is like all about a physical location, like you have a storefront in a physical place and no other employees, well, that doesn't make sense. Well, that's probably not going to get through underwriting. But if you are a real estate agent somewhere and you manage a team and you want to, manage that team from a distance and have your primary here in Puerto Rico, and you can write that up into a letter and it makes sense, cool. We can use that income. All right. So again, the most important thing as far as qualifying for a VA loan in Puerto Rico is going to come down to if your income is going to be here. And it doesn't matter how many days, it matters if the income source on the application will fall here. Hopefully that's clear for you guys. So once we kind of have an idea about if the income will work, the first thing that I do as the loan officer is that I go and I pull a certificate of eligibility from the VA portal. This is super easy. It takes me 2 minutes. And on that document, so it's not like you need to go find it. Is the moral of that story, right? Like if you're a veteran buyer and you want to know if you qualify, you don't have to go trying to track that down. You don't usually we don't need you to go track down your DD 214. Like you don't I don't need anything else. I just need three pieces of information: your name, social security number, and date of birth, and I can see if you're eligible uh pretty quickly, right? Like 99% of the time, that's all I need in order to be able to pull that certificate of eligibility. On that document, it tells me some important information about your eligibility, right? It'll tell me if you've ever used the VA loan benefit before, and if so, for how much, right? Super important. I'll get to that in a bit. Also, it'll tell me how much eligibility you have left if you have used it before. So that helps us calculate, okay, if you're making another purchase with the benefit, how much can we finance? It'll also tell us if you're exempt from the VA funding fee. So um, folks, folks who have a service-connected disability are exempt, right? They do not have to pay the VA funding fee, which is great. Otherwise, if you're not exempt from that, typically that gets tacked onto the loan amount, right? So we're able to finance that funding fee. So it's not something you have to come out of pocket for, which is helpful. So that's why sometimes if you do 100% financing for a purchase, you'll see that your actual loan amount at closing is a little bit higher than the purchase price of the home, and that's because of that fee that got rolled into the loan amount to keep it to keep it so that you don't have to bring that cash to close, right? And so that's like the first thing I'm going to look for after we discuss income. I'm going to jump in with these three pieces of information and pull a COE, certificate of eligibility, and make sure that you are in fact eligible for the VA benefit. Um, the rest of the application is very straightforward. Like at CoLab, our whole goal for operating in Puerto Rico is to provide the same level of service, the same transparency, the same process in Puerto Rico getting a mortgage as if it were any other, like we do everywhere else, and trying to provide the highest level of service and the smoothest process. And so in the application, we look at three areas: credit, only a soft inquiry. No, we cannot use your Credit Karma FICO score. The FICO score really is the least important aspect, and I'll get to the reason why. But the FICO score is the least important thing. We need to see what are your monthly debt obligations for every month, like those minimum payments for credit cards, car loans, student loans, alimony payments, whatever the debts might be, reflecting on the credit report. That's what we need to see. And a soft inquiry is free to the borrower. We get it in like a minute, and it does not hurt the FICO score at all. We could do it literally an infinite number of times, and there would have no impact on the FICO score. So that's what we do to review credit, and that we get basically within a couple minutes, like right after the COE. Second, income. We'll have a conversation, obviously, about that to make sure that you would have some income that could work here in Puerto Rico. But then we're going to request some documents to support that, which is the same documents that the underwriters are going to need later, right? And this helps us avoid really uncomfortable and expensive surprises later. Because my worst nightmare as a loan officer is when I tell somebody, okay, green light, go buy that home. They, write it, they sign a contract, send an earnest money deposit, and then we get into underwriting to find out, oh, sorry, this income that I thought you had, you don't have. At least we can't use it, and now your deal is dead, and you're not going to get the home, and you might lose your deposit. It's like that. That's my worst nightmare. So that's why we ask for a full pre-approval, some income documents. So we try to keep that minimal, but that is a part of the process, right? To help now to get you pre-approved, and for later, it's the same documents for underwriting. And then we also ask for whatever assets or whatever savings, whatever funds the borrower is looking to use for the purchase. And I know, some people might be saying, "Wait, Nate, but it's VA. There's no money down." Yes, you're right. We're going to get to that. But still, there might be some closing costs. There might be some other things, and for that, we request like asset statements, bank statement. Those need to be, showing sufficient amount of funds, that the funds are seasoned, which is a way of saying that it's been in the bank account for a sufficient amount of time that we can use it, right? It needs to be already deposited, and that it's sourced, like that we know where those funds came from. So those are the criteria there. Don't forget, folks, if you have any questions, we got a Q&A section, and we also have a chat section. So I'll be reviewing that. And so I'll be keeping an eye there if there's any questions that come out. Continuing on with the basics. So these questions, and I don't know if anybody wants to see if they can beat me to the answers here. Is there a minimum FICO score for VA? No, there's not, right? There is not a minimum FICO score for VA. So like, somebody's credit could be in the toilet really bad, like low, 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 and potentially we could still get them a loan. It does depend why the score is low. So like if their score is super low because they have like three or more, or less than three, it could be less than three, but if they've got a bunch of late payments on another mortgage, or they just foreclosed on a previous VA loan and now they're applying for another one, guys, that's not going to work. But just the score, like if that's the only thing and everything else looks okay on the report, there's technically not a minimum set by the VA. Now, lenders do have minimums that they'll go with. So, of the lenders that we have currently licensed that we work with in Puerto Rico, the minimum that the lender would accept in Puerto Rico for a VA loan is 580. But 580, I mean, like that's still pretty good, right? Okay, so that's the deal with FICO. Minimum down payment required. Most people know there is no minimum down payment for VA loan. One of the best benefits is that we're able to finance 100% of the appraised value, right? If it doesn't appraise for the full contract price, the borrower is going to get the VA borrower is going to get asked to bring that difference in cash. Okay, so keep that in mind. But we can finance 100% of the appraised value so long as it appraises on value. And then another question: can the VA be used for a multifamily property purchase? Yes, it can, so long as that VA borrower is going to occupy one of those units as their primary home. If so, it can't just be like a multifamily investment property. It can be multifamily where they're occupying one of the units and then rent. You can, have at it, rent the other ones out, definitely. Even short-term rent them, whatever you want to do. That's totally fine with VA, but you got to occupy at least one of those units. Other question: is there a maximum loan amount for VA? No, there is not. The VA does not set a loan limit, but just like we saw with FICO score, lenders do set a limit. And in Puerto Rico, that limit is, at least according with the lenders that we work with, is $2 million is the loan amount that we can do with zero down. And I'm happy to report that just last week, we closed one for a loan amount, VA loan, $1.9 million with zero down payment. And obviously, you have to have an income to support that payment and the insurance and the property taxes and if there's an HOA and all those things. But so long as your income is sufficient to cover the payment, there is not a loan limit set by the VA. And for most lenders, it's right around $2 million, right? So that's a pretty good one to know. Next up, asking, are you allowed to have multiple VA loans at the same time? Most definitely, yes, you can. You can have multiple VA loans. It's a myth that you can't have more than one, even at the same time. So like, here's a scenario that we see pretty often: is that somebody they're living and working. Let's say that they're of duty, right? And that they're assigned to a location. I'm going to say Texas. Go. So they're living in Texas. They buy a home with their VA home loan benefit while they're serving there, and then they get transferred. Right now, they're getting transferred to Puerto Rico, and they want to come here and they want to use their VA home loan benefit again without having paid off that loan and without having sold that house. That's okay. That's one of the scenarios in which we can help somebody use and have at the same moment two VA loans that are going. Now, underwriters are going to be, looking. If you just bought a VA loan and you're looking to turn around and buy another one, they're not going to allow that. There's usually you got to have the first one going for at least a year, and then have probably going to have to write a letter of explanation for why you're departing that residence. But totally possible. We help folks with it all the time. As a matter of fact, at this moment, I have two separate clients that I'm helping use that they're going to have two VA loans at the same time. Next question. Can you buy a condominium with VA loan? Yes, you can. I'm going to get to that too. Thankfully, VA is great because it has a website that I'll put a link to just now, where you're able to go to that website and it'll tell you which condominiums are already pre-approved by the Affairs Association. So that's super helpful, narrows that search a lot. You don't have to just go essentially door to door. But yes, you can buy a condominium so long as it's your primary home. You can buy a condominium with the VA loan. And does the VA cover closing costs? It could, but if there's not a guarantee so let me put it this way. The VA does not cover closing costs, and the VA doesn't say that there's no closing costs. Now, before I get a bunch of angry messages and phone calls, let's talk about closing costs for VA, right? Because I do from time to time get calls from folks saying like, "Oh no, the VA, I just talked to the VA and they promised me no money down and no closing costs. I could buy the house for no money." No, that's a myth, right? That's a slight misunderstanding going on. So let me see if I can try to help clarify that. The VA does allow for no down payment, right? This we know we can do 100% financing. So that's a side. Zero closing cost is a different thing because closing cost, down payment is the money that goes towards the equity position, like goes towards your equity in that property at closing. But closing costs, essentially, it's just the cost of doing business, the cost of getting that house for all of the entities that were involved in the purchase. So the appraiser, title company, the government of wherever you're buying it, the loan institution that's helping you. So like, the real estate agents, there could be, there could be closing costs associated with these different entities, and that is separate from a down payment. Okay. And the VA makes no guarantee that your closing costs will be zero. Okay. There are ways, and I'll get to it momentarily, how we can achieve that, and it can be done, and we like to do that, but it's not in every case like 100% financing, like zero money down. But and then the other thing to note is that zero money down payment is also does not mean zero amount of good faith deposit. Now, that that money has a different name depending on where you're from. It can be called good faith deposit. It can be called um uh shucks, like just a regular like earnest money deposit. There we go. Depósito de buena fe in Spanish, or pronto, sometimes it's called in Spanish. It's the money you're giving the seller to give you some time, not take any other offers, and let us get work on closing. Okay, that good faith deposit. So the VA doesn't say anything about that. That can be, you're going to transfer that to, in Puerto Rico. Typically, that goes to the listing agent's escrow account that they manage, and that money just sits there, and that's so that the seller doesn't take any other offers. And at closing, it gets contributed to whatever costs you see. Right now with VA, there's usually not a down payment, so that good faith deposit is going to get applied to closing costs, right? But the VA doesn't say that no, there's no, you don't have to give a good faith deposit. Sometimes I have folks tell me, "Oh no, but it's VA, I don't need to give a deposit." It's like, no, that's not a feature of the VA loan. Just the down payment is guaranteed is available to be 0%, right? So long as it appraises on value. Okay, doke. Hopefully that's clear. So how could you get zero money in closing costs, right? Um, a couple different ways, but it basically comes down to two factors. One being seller credit, okay, which is when the seller of the property agrees to contribute back to you, the buyer, some of the proceeds of the sale, right? So like buying a property for $100,000 plus with 2% in seller's assist, can be called sometimes, or seller credit. That means that $2,000 of the money that I'm going to make from selling my property, I'm going to give to you as the veteran buyer. Thank you for your service, right? Maybe you can spin it that way to get some seller credit. Honestly, in Puerto Rico, it is less common to see seller credit because Puerto Rico is a more competitive real estate market than most other markets, right? Like here, sellers are, less likely to want to give you some of the proceeds. That's why you see so many listings that are not subject to appraisal, and as is. Doesn't mean we can't appraise it. It just means that the seller doesn't care what the appraiser says about the value. They want what they want for it. So bring your financing. That's nice. But if it appraises low, they're going to expect that you're bringing that difference. So in that kind of an environment, it's difficult to it's maybe difficult or isn't the right word, but it's less common to find a seller who's willing to contribute some of the proceeds of their sale back to the buyer. So that it is possible and it does happen, and we have done it. But it's just a little less common here in Puerto Rico. But that is one way, is with seller credit. The other way is with what's called lender credit. This is essentially, if you've heard of discount points, which is where the buyer agrees to pay an additional amount at closing, which is called a discount points, to lower the interest rate. Lender credit is essentially the opposite, where it's like you're agreeing to take a higher interest rate, and for doing so, the lender is going to pay you some money at closing that you can apply to your closing costs. So you can imagine a scenario where if you take a little higher rate, maybe, and if you can get the seller to agree to give you some seller credit, that could be enough to cover all your closing costs, and then you could literally be buying a property with zero down and zero closing costs, or at least those closing costs would be covered by the seller credit and lender credit. Um, another way that this can happen is if it, let's say that the appraisal, that the contract price is for 200,000, and then it appraises at 225. Okay, awesome. Um, that is a scenario where we've already agreed that 200,000 is a reasonable price. You could potentially go back to the seller and negotiate and say, hey, could you kick me some seller credit? And I believe for VA, there is a limit. It depends on if you're making a down payment. There's a limit to how much seller credit you can request. And so you can ask, okay, look, it appraised up. Let's push the contract price up higher, and then I'm going to request seller credit to make up that difference. So like the loan amount goes up, but you're not having any money down, and that seller credit can come out of those additional proceeds. Well, recognize this might be getting a little technical, but I'm trying to provide a little bit of info. So if you have questions or something, feel free, like I said, put it in the chat, put it in the Q&A section, or reach out to me afterwards, and I'll be happy to try to walk through any specific questions you might have. But that's how we can achieve zero closing costs, zero down payment, that you would likely still have to put a good faith money deposit, which you'd likely get credited back at closing. Okay, no. And then funding fee, VA funding fee, we already talked about that. You're exempt from it if you have a VA service-connected disability. Your COE is going to say that you're exempt from that funding fee. If you're not exempt from it, it's not money you have to come out of pocket for at closing. We can tack that on if you want to. We can, or we can tack it onto the loan amount, and so we can finance it in. This way, you don't have to pay it at closing. Kidoke. So benefits for the VA loan, there's a bunch, right? We've already talked about this one here, a couple of these here, that it allows for 100% financing, or in other terms, zero money down payment. There's no minimum FICO score, and we can go higher with this here called DTI. That's the debt to income ratio. That just means we can take your income and stretch it further if we need to in order to help you make those loan payments, right? So other loan programs don't allow us to go up as high as VA. VA doesn't have a limit to the debt to income ratio, so long as we get underwriter approval and good findings, then we can stretch that income as much as they'll allow us. Okay. There's no max loan amount. We talked about that benefit. Now with the appraisal, there's a lot of misconceptions about VA appraisals, and I think I have like a whole other uh, that could be a whole other topic, but there are benefits really to the VA appraisal especially from the buyer's perspective. One, is that we can order your loan officer, we can order it faster. We don't, for other loan programs, we have to wait until we've registered your loan. Like we have to wait till you are under contract. Once you're under contract, we register your loan, send you what are called disclosure forms. You have to sign them, and then you have to pay for the appraisal, and then we can order it. Okay, it's a bunch of steps. VA appraisal, we don't need any of that. Well, we need a contract. As soon as we have the contract and the deed to the property, boom, we can order the appraisal. And so there's less waiting, so that we can get that started faster. With the VA, if it appraises low, we have the borrower and everybody else. We have what's called the tidewater period, which is usually if a property appraises low, you just get the report. The appraiser says, nope, didn't appraise for the contract price. See you later. With VA, we have 48 hours. They give us a notification. They'll say, hey, this didn't appraise on value. Send me some comparable properties before we make this official in the report. And so that gives everybody, the lenders, the real estate agents, buyer, seller, anybody, the opportunity to find comparable sales and send that information over in an effort to try to get that appraised value up to the contract price. So that's nice. You have 48 hours from the time that they tell you to get that information to them, which is a nice thing. If it still doesn't appraise on value, and you really think that it should, a VA borrower can then we can reach out to the Veterans Affairs office, and that they will try to provide support. They have a team of appraisers that will look at it, and they'll tell us too, in their opinion, is this appraiser doing a good job? Did they come to the right opinion of value or not? Right. So that's some helpful. I've only ever gone that route one time. Takes a little bit of extra time. It took about, I think, 10 days when we did it. But it's some additional support, and it did help nudge the value up a little bit, if I remember correctly. So that's a massive benefit to a VA loan is on that appraisal. We have a little extra time and some extra support for trying to get it to come up to value, all dependent on the comparable sales. And then there's another benefit for borrowers, which is called the amendatory clause. What that basically means is that if, and you know that like many contracts in Puerto Rico, option contracts it's like as is, not subject to appraisal, and that there's no contingencies. Because this is a federal program, this a mandatory clause protection, it trumps anything that might be in that contract. And so even if it appraises low, even if you don't have an appraisal contingency, that borrower should still be able to get their deposit back in full, right? That's a protection, that's a benefit from the VA. And if obviously, that can get a little tricky with trying to explain that to a listing side if they're not familiar with it, but it can be done, and you have that protection. It's a federal part of the benefit, so basically a guarantee. And then also here we got I think it is accurate to say that VA appraisals are stricter. They have higher requirements. That's precisely because they only want our active and former service members to be living in an adequate home. Okay, and so that is why that they have higher requirements. And so that could look like if there's safety features in the home that aren't in good shape, perhaps that's like like loose handrails or missing things in the home, or the wiring isn't right. All those kinds of things might get called out, but this is precisely to make the property safer for our service personnel when they're living in their home, which I think makes good sense, right? Here is the QR code if you're interested in finding a condominium that qualifies for VA home loan in Puerto Rico. This is a QR code here that you can scan. Should take you directly to the website where you can find that the list of condos that are approved. Another benefit from the buyer's perspective for a VA loan is that veteran buyers are not allowed to be charged a real estate agent fee, right? So if you're a real estate agent, that's a good one to know, because if you're structuring like a buyer's comp agreement, that you would need to know that that's not something that a VA borrower is allowed to pay for at closing. Okay, but that's definitely a benefit here that we'll list. And then, like we said before, you can purchase multifamily properties with the VA home loan benefit. So this is the main list, I'd say, of benefits to the VA home loan. And lastly, some myths that will bust here. Obviously, it is available in Puerto Rico. Otherwise, I wouldn't be doing this talk. But that is one we get phone calls all the time asking if that's possible. People think too that VA loans are harder to get approved. As a matter of fact, VA loans have a higher approval ratio than all other loan programs by double, right? So like more VA loans get to the closing table than all other loan programs. Uh, so that's a massive benefit. So that's not true that they're harder to get approved. They're, I guess, easier, right? They get to the closing table more often. Another myth is that VA loans take longer to close because of all the red tape with the Veterans Affairs Association. That's a complete myth. We don't call the VA. They're like they don't. They're not involved in any of it other than generating a certificate of eligibility, and that's like an automated system. Um, so there's no like red tape. It's not like we have to involve the government and all these other entities. Nope, that is a myth. As a matter of fact, in Puerto Rico, we have been cleared to close on a VA loan in as short as 17 business days. Okay, so it can be done, um, but that's a myth for sure. VA appraisals take longer. That's not true either. Like I said before, we can order them sooner, so they should be able to get done faster than a conventional or other type of loan program appraisal. Another myth is that you can only have one VA loan at a time. I addressed that one. That's a myth. Under certain circumstances, you're able to have two or more going at a time, and then especially if you have the eligibility for it. And then the last myth to address here is that only combat veterans are eligible. Couldn't be further from the truth, right? So we have active duty folks, we have former service members that are eligible from all these different branches. It does not have to be that you were in active combat um, to qualify. You just need a COE, which I can help you find. So those are all the myths. Don't see any questions at the moment. So if you do have any questions, now is the time because I am about 3 minutes over where I wanted to be here. So thank you so much to those of you that have tuned in today. Here's my contact info if you want to write it down. If you just want to scan a QR code and go to my landing page where all that stuff can be found and maybe copy and paste it or hyperlinks, feel free to use that QR code. That'll take you to a page where you can find all that info. But thank you, everybody. If you're a veteran, thank you very much for your service. Very, very much appreciate that. I have a lot of family members myself, and I'm grateful to you for our quality of life here. So thank you. Happy Valentine's Day. We got the dancing heart over here too. So happy Valentine's Day to you guys. But let me know if there's anybody that I can help to explore if the VA could be a good option for you and what those numbers would look like and all that stuff. There you have my contact info. But thank you all so much for being here, and I will see you out there. All right. Take care, everybody. Thanks very much.